Hey there, Tamir from Fibonacci-Traders.com. I hope everybody's enjoying this weekend so far. Thank you very much for joining another weekly edition. Stock market recap. Like, subscribe, stay tuned for the rest of the video. Before we dig in the charts, few last hours, special Black Friday, 34% off our Fibonacci Traders online program. You will learn how to master your entry and exit points. You will learn how to boost your gains, minimize your risk, control your emotions, and on top of all that, lifetime access, support, guidance from me, and all Discord channels will be opened. You will get the syllabus is 6 hours, 49 lessons. You will learn support resistance, identify a trend, what are trend lines, how to trade the gaps, Fibonacci, of course, risk management, false signals, indicators, and more and more and more in this syllabus, all the patterns, and you will learn the broad information, the only true formation in price action, candlestick analysis, aka in-depth price action and multi-time frames, and above all, how to master Fibonacci. So take this advantage, check the links in the first comment in this video and become your own indicator. Let's see what SPY and Friends brought us in the past week. Very short week, 3.5 trading days, and trend lines once again acting as the true support and resistance for future price action. You know this red trend line, we drew it few weeks back, and surprise, surprise, the high of this week got touched and stopped on this red line. Next week, can we get bulls sentiment towards this green line at the all-time highs at the 480 area, or can we get some kind of a retracement, pullback? Bulls need to take some rest after these 4 weeks. Very bullish trend in the past 4 weeks. We got ourselves 10% to the upside since the low of October. We got 11.4% plus minus in just 4 weeks. Bulls taking a rest will not be surprising. QQQ 390, very tough resistance. Look left, resistance over here, support and resistance over here. Closed the week with a doji after a very strong 3 weeks to the upside. Doji, as we know, is the most significant signal in candlestick analysis for what might be some kind of a cool off. 378, 379 to the downside before the next leg up. Dow Jones, very strong week. 350 from resistance now becomes support. Next resistance for the Dow Jones is the 356, 357 area. Look left, it was resistance over here, resistance over here. So by natural things of price action, 356 is the next resistance. Above it, we are heading towards this red trend line that acts as resistance, but it's a good resistance. Believe it or not, if you're hearing it here for the first time, there is such a thing as a good resistance. Why it's a good resistance? Because it helps us to identify the higher highs. And we know that higher highs, higher lows is the definition for price action. Let's clean the chart on the IWM. IWM, as you can see, 200 to the upside, very tough resistance since April 2022. 162, 160 to the downside, this red line, very important area of support. Each and every time, touched, bounced, touch, bounced. Also, October, touch, bounce. Now let's see continuation above. No need to guess. Fibonacci, next Fibonacci is the 181 area, which is also the 50% area between these two red lines. Above it, 185, 192, and then can we get in the last 4 weeks of trading in 2023, can we get IWM to the 200? Bitcoin on the weekly, still time, but as you can see, trend lines are resistance, support, 2 consecutive dojis on the Bitcoin on the weekly, hanging on. this trend line, and as long as Bitcoin is hanging on, making higher highs on this trend line, we are good to go to long. But 2 consecutive dojis, looks like bulls of Bitcoin are out of power. They need some kind of a trigger to go up. If they will break up and above, next is the 43,100 and then 50K. If bulls will give up on this trend line and they will take some time off, 35 needs to hold. Otherwise, we will see 32,500 and 31 to the downside. Ethereum, same thing. 3 consecutive weeks struggling to break up above this red zone. This red zone, look left, resistance over here, resistance over here, support over here. So, once again, looking left, identifying potential support and resistance from the past will give us potential support and resistance for price action into the future. We don't even need Fibonacci. We don't need nothing. We need to train our eyes on multi-time frames to know where price came from and with the highest probability where price might be heading next. Now we can ask ourselves if and when Ethereum will break above this red zone next, 2350 and then 2650. Below 1890, we are heading towards all these levels as potential support for future crude oil futures. Hanging on the 618 Fibonacci retracement, bound, we had this uptrend, retracement, 618, 2 consecutive weeks, dojis. Now let's see if bulls of the crude oil can come back and bounce back above the 78. Then we will see 81 to the upside. Natural gas futures still inside this uptrend yellow channel, holding this red zone as support. Once again, this red zone, we have been talking about this red zone in the past few weeks, already few months. Now this red zone from resistance, as you can see, only look left, resistance, then became support. Now let's see, can bulls of NG1, the natural gas futures, can bounce back towards the upper yellow trend line. On the daily, we are still hanging on the 285, breaking below this gap will get filled. Before we continue, all I ask is like, subscribe, share with friends, help me grow this channel. This is all I ask. It will be much appreciated. Apple on the weekly, very tight price range, doji. On the daily, it looks like this. Let's clean the chart. Look how a weekly doji looks. Nothing on the price action. 188.70 to the downside, 192 to the upside. This is why we have a doji on the weekly. Always zoom in, zoom out to get a better point of your price action and understand how a weekly candle formed. Go back to the daily. How the daily candle formed. Go back to the 65 minutes. And so on and so forth. Now, bulls of Apple are tired. 184 to the downside needs to hold. Long continuation above the 190.50 towards the 198. And as you can see, we have a massive broadening formation on Apple on the weekly. Breaking above the 198, we will see above 210, around the 215 before the end of 2023. Let me know in the comments below, what do you think where Apple is heading? Can we get new all-time highs on Apple before 2024? Microsoft, nothing stops Microsoft. We have this red line that helps us to identify the higher highs since May of 2022. Now, all we need is continuation above the 377, and then we will meet this red line at around 400, 410. Can we do it before the end of 2023? Very interesting. Tesla, after previous week, very bullish, almost 10% to the upside, but 618 Fibonacci retracement. Once again, proves itself as a very important area of resistance or support. Depends where price meets this area. In Tesla's case, on the weekly, Tesla is meeting once again the 238 area. It's the 618 Fibonacci retracement. Support, resistance, support. Now, resistance once again. Inside candle doji. Let's see if bulls of Tesla have enough power to go up, above, and then 252, 271, and maybe 298 before the end of this year. Almost 30% to the upside in 4 months. Another Tuesday for Tesla, but trend lines. Watch out for this short-term yellow trend line. 4 months of a downtrend. And if you take this trend line, and you can see it also holds the lower lows, lower highs, downtrend on Tesla until proven otherwise. Nvidia closed the week 3% to the downside, and you know these two zones, the red zone as resistance, red zone as support. Let's make this one different color. Green zone support, red zone resistance. If you're not long yet on Nvidia, I would wait for at least 2-3 days closing above the 500. As you can see, the 500, very tough resistance. If you're already long on Nvidia, maybe it's time to minimize the risk, minimize the position. Never close 100% of the position because you never know where Nvidia will head. No one knows where the price will head next. Maybe next week it will break and go to 520, 550, 560. You never know. But for now, what do we see? Outside candle, engulfing candle to the downside. Now, let's see. Next support, no need to guess, Fibonacci. And as you can see, price stopped on the Fibonacci. Below it, 485, 458. Long continuation, in my opinion, above in this time where we still have these candles, above 502 towards 536 and then 583. Google, also same as Microsoft, nothing stops Google. But as you can see, Friday went down 1.3%. This is why we have some kind of a bearish pressure. But overall, Google looks good. Long continuation above previous week's close towards the 139 and then 141. Weekly close above 149 and we will see 150. And we have a massive broadening formation on Google. For now, Google goes up. Retracement below 130.80 to the downside. Then we have all the levels to the downside for future support. Meta, bulls of Meta, getting tired each week that goes by. Not surprising after this bull run. Now, as you see, they had a very tough struggle to break above this red zone. Now with the doji, this red zone, the 326 area, needs to act as support before the next leg up towards 354 and then 383. All-time highs on Meta. We are 13%. 5 weeks, 13%. 5 or 4 weeks. Let me check. 5 weeks, 13%. 5, Fibonacci number. 13%, 13, Fibonacci number. Ladies and gentlemen, it all comes down to Fibonacci. Everything is Fibonacci. Shopify on the weekly looks like Shopify getting tired, but overall, nice bullish continuation. Now, Shopify back to July's highs. Let's see continuation. Massive broadening formation on Shopify. You see broadening formation all across the board because this is the only true formation, only through patterns if you want, for price action. All the rest of the patterns are not so reliable, but if you want to know more and really understand in-depth candlestick analysis, all the rest of the patterns, including how to find Browning formation, how to trade Browning formation, as I said, 34% off Fibonacci Traders online program, the only program out there that will give you lifetime access for support and guidance from me inside and outside trading hours, and of course all Discord channels, lifetime access. Now let's see continuation above 70, in my opinion 91 before 2024, 30%, 5 weeks, it's around 6% per week. Shopify can do it. Netflix is next. Netflix. No one talks about Netflix, but Netflix is a beast. Nothing stops Netflix. Netflix since October lows, 38, 39% on Netflix in 1, 2, 3, 4, 5, 6 weeks. For now, bulls are in full power on Netflix. Let's see continuation above 490. We will see 540. 540 to the upside, 13%. As you can see, almost 13% in 5 weeks. Amazon, second week in a row, third week, closing above the 142 area. Very important area. It was very tough resistance. Broke to the upside beginning of November, and since then holding above the 142. Very nice bullish trend on Amazon. Also Amazon since low of October gave us 24%. Very bullish trend on Amazon. AMD, last but not least, trend lines are the true support resistance for price action. Another great example of why Fibonacci, trend lines, and in-depth candlestick analysis, price action, and multi-time frames, weekly, daily, intraday, monthly, 5 minutes, whatever you want. You can trade once you know how to handle trend lines, Fibonacci, and candlestick analysis. Long continuation only above this area, the 122, 123 together with this red line, then we will meet 132, but doji of a trend line after a massive bull run. It is the most significant signal for what might be a retracement, cool off on AMD. Not be surprising to see 115 to the downside, maybe even 110 before the next leg up, before the next attempt breaking up and above this red line. So I hope you found this video helpful, educational. Please hit the like, subscribe if you did. Don't forget to check the links in the first comment below. 34% off Fibonacci Traders online program, the only program out there that gives you lifetime access for support, guidance, and all Discord channels. Stay tuned for more videos coming up this week. Until then, enjoy the rest of your weekend.